Good morning. It's Wednesday, July 9th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So yesterday afternoon, I created a short video discussing the copper market following President Donald Trump's announcement of 50% tariffs on copper imports. The decision caused a record spike in copper futures. We went up to about 589 before backing off slightly aggressively. We saw a lot of traders releasing a lot of the contracts that they maintain longs on that type of record breakout, and also hedges start to come in from various mining operations. Now, many of the clients working closely with us at Blue Line Futures have actively participated in the copper market, and I've covered the copper market extensively on CNBC in many different interviews. I also outlined the key levels of support and resistance in the copper market in the chart pack, along with several other precious metals and key commodities. In yesterday's update, I drew a line of support with an arrow pointing upward, indicating that once support had been reached, we anticipated higher prices to follow. Many of you use these tools that are provided by Blue Line Futures to help guide you with your trading needs. If you're interested in getting the chart pack and looking at other key commodities, please register in the link in the description below. Now, copper futures are traded in contracts of 2,500 pounds and much larger in sizes, where on the smaller contract, every penny movement corresponds with a $25 change in value. Given this volatility, there's speculation whether we could see similar price movements in the silver market, aluminum, and other key commodities. So many investors believe that this is possible, which is why we oftentimes add an option overlay specifically for the December contract in silver, and not a formal trade recommendation out to the public in the futures markets here to prepare for any potential explosive move higher. If you like to learn more about some of these different strategies and some of the different key commodities as far as research we provide out, please email info@bluelinefutures.com or register in the link in the description below. Now, looking at the copper futures overnight, it does show it down 2.5%, which is down 14 cents. However, when that percentage gain is captured, it's going to be at the close of the day, New York time, when the futures contract settles, which is right around 12:05 Central Time. So after that movement is when we seen that spike upwards and futures contracts had come down. Excuse me. So looking at the September copper futures, down about 14 cents at 554. Forget the percentage change, forget the change on it. Just look at where the futures are trading. They're at 554. So on that smaller contract, every penny that it moves up to 555, it's $25. Or if it declines, if you're long, you would be down $25 if it went to 553. So looking at some other key elements here is that you look at the copper market, the questions surround that: can we hold these higher prices? Because the U.S. does not have nearly enough mine, smelter, refined capacity to be self-sufficient in the copper market, as many other commodities as well. And the degree of this price impact, whether or not we can achieve the $6 level or whether or not we sell off back to what's called the scene of the crime, where the breakout occurred. And oftentimes those breakouts are retested. If you look at the chart pack, where was that key level of resistance? Well, it was 494 on the copper market, and above that was going to be the 520 mark. Perhaps the old high, the 520, could be your next level of support. One thing to note is that if we see any kind of reversal of President Donald Trump's plans, because he does tend to kind of make some sudden movements here and key shifts in the tariffs. We've seen this with U.S. equity futures, where futures could come off dramatically, specifically in the copper market. So a lot of this is heavily dependent on the details of the tariff, including its rate, the application, any kind of potential exemptions. If you start to get exemptions and exemptions start to be broadcasted out longer, we could see futures decline back down to that 520, $5, and even the 494 mark. Now, what's the impact on the gold market? Because gold futures, they did recover with the metals here. However, we did see futures under quite a bit of pressure. Now, why weren't we really actively pursuing the copper market here yesterday in the morning? Well, you saw copper futures, they were selling off below $5. You had silver futures down about 1.8%. You had the gold futures down about 1%, breaking below the 3,300 level. So this was a sudden shift into that copper market. Under normal terms, if we did not see that type of announcement, chances are copper futures would be in the 488 to 494 mark, given where the other futures are at in the gold market, in the silver market, in platinum, and other outside key commodities. So what's the impact on gold prices again is if the tariff is implemented, it will raise the cost through various sectors of the U.S. economy. Many of these different industries and applications depend on copper, making it more difficult for the Federal Reserve to raise interest rates, lower interest rates, because if you have higher copper prices, which are going to impact copper wiring, which will impact the cost of cars, it impacts plumbing, anything that's going to be utilizing copper will cost more, and copper is one of the most widely used commodities around the globe here. So anyone who believes that the Federal Reserve would be able to cut rates aggressively given that type of tariff, I think it's just an incorrect thought process. And anyone who believes that the appointment of a new Federal Reserve chairman or woman would be able to just come in and aggressively lower interest rates, given that type of impact on a tariff, should not count it at all. I mean, adjusting interest rates really requires the support of the majority of the Federal Reserve Open Market Committee here, and you're just not going to see that. So because of the fact that the higher inflation costs, you are seeing gold futures under a degree of pressure. Now, looking at the chart pack, gold futures are coming down to an upward sloping support line. And what we'll want to see here is that we're getting closer to a consolidation point. So you check in on gold, 33.02, overnight low, 32.90, overnight high, 32.16.5. 32.16.5 was, and also that low, was really where the ranges were yesterday on the day. So we really haven't gone anywhere in about a 48-hour period in the gold market, just ever so slightly lower. You look at silver futures up about 4 cents here and continuing to lift up. We saw silver futures announce a strong recovery after those tariffs were announced in the copper market, taking futures to unchanged to slightly higher on the day. What does this also do? It puts that gold-silver ratio under some pressure, coming in at about 89-1. Now, looking at the outside markets, because we generally touch base on that, we see U.S. equity futures, they are slightly higher here as of about 5:25 a.m. Central Time in Chicago. In the Magnificent Seven stocks, they are about mixed in pre-market trading. We saw Amazon shares just rising ever so slightly, leading the gains here after falling about 1.8% yesterday. We were really monitoring, if you're an equities trader, those 4-day Prime Day sales. They got off to a bumpy start here with people saying that, hey, these sales are falling about 14% in the first few hours compared to the company's last year event. These are things you want to monitor if you trade the NASDAQ, if you trade the S&P 500 from longer term perspective. Now, you look at some of the strategies. Wall Street expects very little from the S&P 500 companies this earnings season, forecasting 2% growth and a margin of dip for the second quarter guidance. And those models suggest that earnings should easily clear consensus, reinforcing the case for a recovery if the narrative takes hold in the equity markets here. So our thesis when it comes to U.S. equities is supporting buying the dip while maintaining long-term put protection in the event of any kind of market shocks. Somewhat different from what we're doing in the silver market, where we anticipate prices to move gradually higher with the potential breakout over the bull flag, an explosive move higher if we get over the $40 and $45 mark. That's why we add the option overlay to going to the upside. Now, looking at some of the economic data coming out, we will see May final wholesale inventories expected at about 9 a.m. Central Time, followed by the June 18th FOMC meeting minutes at 1 p.m. So investors are really seeking some clues here as far as the insights of the Federal Reserve and their policy path going forward when we get those minutes here released later on today. Looking at the ETF flows, the exchange-traded funds, they did cut about 20,000 troy ounces of gold holdings, and it's the third straight day of declines here. That's the longest losing streak since May 21st. Those sales were equivalent to about $65.2 million at yesterday's spot prices, and total gold ETFs here held by exchanges, they rose by about 9.2% this year. So gold did fall about 1% in the previous trading session here, and the ETFs, they also cut about 677,000 troy ounces of silver holdings in the previous session here. You're just seeing gold futures losing a bit of momentum with some of the dollar strength, with U.S. equities near all-time highs here, with some of those expectations for the higher inflation data due to the tariffs and the specifics surrounding the tariffs, where you're seeing things identified like copper, steel, aluminum, pharmaceuticals, and things like that are holding that upwards as far as inflation data. So if you guys got any questions, be sure to register for some of the information in the link below. We'd love to get you out some more data here. We'll also be doing more videos here, especially when you have developments unfold and if we get any kind of explosive moves in other outside commodity markets. Remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.